It is essential for the long-term financial well-being and expansion of any company to be able to obtain a low-interest loan for commercial purposes. When calculating the total cost of borrowing money, one of the most important factors to consider is the interest rate on the business loan. This is true whether the borrower is a new company seeking an injection of capital or an existing company wishing to expand their operations. The purpose of this video is to assist you in making educated decisions regarding your finances and to fuel the expansion of your business by examining 5 of the best low-interest business loans currently available. Number 1. Lending Club, empowering business growth. Lending Club is a platform for peer-to-peer lending that links individual borrowers and investors with one another. It provides businesses with both term loans and lines of credit, and the interest rates are among the most competitive in the industry. Key features. Lending Club offers business loans with competitive rates and low interest rates, making it an appealing choice for companies that want to reduce the amount they pay to borrow money. Borrowers might benefit from having their payment amount predetermined on a monthly basis, since this makes budgeting and financial planning much simpler. Loan terms that are flexible. Lending Club provides loan terms that are flexible, enabling businesses to select a payback period that is tailored to their specific financial circumstances. No penalties for early payoff. Companies are able to pay off their loans early without being subject to any penalties for early repayment, which could result in a reduction in the total amount of interest that was paid. Cons. Lending Club's loans come with origination fees attached, which might have an effect on the total cost of borrowing money. Strict qualification standards. Despite the fact that Lending Club is available to a diverse range of businesses, the company may have more stringent qualification standards compared to some other lenders. Number 2. Funding Circle, tailored business loans. The peer-to-peer financing network known as Funding Circle was developed with the needs of smaller enterprises in mind. The provision of individualized loan options at reasonable interest rates is the primary emphasis of the company. Key features. Funding Circle is well known for its fair and plain loan terms, which assist businesses in gaining a better understanding of the costs associated with borrowing money. Businesses can benefit from stable interest rates since they provide predictability in monthly payments. Businesses can benefit from fixed interest rates. Rapid funding. Funding Circle places a strong emphasis on providing a rapid and efficient funding procedure, which enables businesses to obtain the funds they require in a timely manner. Personalized service. The platform offers a personalized service in which dedicated loan specialists collaborate with businesses to better understand the requirements of those organizations. Cons. Origination fees. Funding Circle, much like Lending Club, has the potential to levy origination fees, which will have an effect on the total cost of the loan. There is a possibility that Funding Circle will have a minimum criterion for annual income, which will make the platform better suited for companies that are already well established. Number 3. Bluevine, innovative financing solutions. Invoice factoring and lines of credit are just 2 of the creative financing options that Bluevine provides for local and regional small businesses. Particularly well known for having interest rates that are among the most competitive in the industry is the company's business line of credit. Key features. Bluevine is able to give businesses with a variety of flexible financing solutions, such as lines of credit, from which they can withdraw funds as required. Rates of interest that are reasonable. Because the platform offers rates of interest that are reasonable, it is an appealing solution for companies that are looking for economical financing. Speedy approval. Bluevine places a strong emphasis on having a speedy and efficient approval procedure, which enables businesses to gain access to cash in a timely manner. No fines for early repayment. Companies are able to repay their line of credit early without being subject to any fines for early repayment. Cons. Requirements for a minimum credit score. Bluevine may have a minimum credit score requirement for businesses before they are eligible for their services. Although Bluevine offers helpful financing choices, the loan amounts may be lower than those offered by some other lenders. This is due to Bluevine's position as a marketplace lender. Number 4. OnDeck, financing for small businesses. OnDeck is a respected online lender that focuses on offering small businesses with various funding options. It provides both term loans and lines of credit, both of which can be obtained at interest rates that are very competitive. Key features. Application process that is quick and straightforward. OnDeck is renowned for having an application process that is both quick and uncomplicated, which enables firms to get started immediately. Competitive interest rates. The platform provides cost-effective financing choices by offering competitive interest rates on its term loans and lines of credit. Revolving credit line. The line of credit offered by OnDeck functions as a revolving credit line, which enables businesses to withdraw funds whenever they find it necessary to do so. Accessible to small businesses. Because OnDeck caters to the financing requirements of small businesses, it is a choice that is ideal for both growing firms and businesses that are just getting started. Cons. Origination fees. OnDeck has the right to charge origination fees on its loans, which will have an effect on the total cost of borrowing. Daily or weekly repayments. The repayment terms for OnDeck loans are often arranged as daily or weekly, which may require certain firms to carefully budget their finances. Number 5. Kabbage. Flexibility in financing. Kabbage is an online lending platform that specializes in extending credit lines and loans to proprietors of small businesses. It is well known for the versatility of the financial solutions it provides, particularly for companies that have a variety of different finance requirements. Key features. Lines of credit that are flexible. Kabbage provides businesses with lines of credit that they can draw from as needed, providing flexibility to businesses in managing their cash flow. Quick approval. The platform places a strong emphasis on a swift approval procedure, making it possible for enterprises to get their hands on funds in a hurry. Kabbage's lines of credit come with interest rates that are comparable to those offered by other lenders, making the company an appealing choice for companies that are looking for reasonably priced financing. Kabbage focuses to the financing needs of small businesses and offers solutions that are accessible to both growing firms and businesses just starting out. Cons. The monthly fee that Kabbage charges for its lines of credit is something that businesses need to factor into their evaluation of the total cost of using Kabbage's services. Loan terms that are typically shorter in comparison to conventional term loans. The loan terms for lines of credit offered by Kabbage are typically shorter. Choosing the best low-interest business loan. Choosing the most suitable low-interest business loan is dependent on a number of different aspects, such as the financial requirements of your company, its credit profile, and the particular terms provided by each potential lender. When you are deciding which of these possibilities to pursue, some important considerations to keep in mind include the interest rates, fees, loan periods, and general applicability of the financing solution to your professional objectives. Before settling on a choice, it is important to make sure that you have read and fully understood the terms and conditions, as well as any customer reviews, as well as any costs that might be hidden. In the end, obtaining a business loan at a low interest rate is a smart action that can have a favorable impact on the financial stability and expansion of your company. You will be able to gain access to the funds you require to invest in expansion, equipment, inventory, or any other important facet of your business operations if you select a lender that meets the requirements of your company and provides the conditions that are most advantageous to you.